On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Hello, welcome back. We're on day 2 and I'm with Ronald-Peter Stöferle, the fund manager over at Incrementum and founder of the In Gold We Trust report. Ronnie, good to be with you.
Hey Peter, good to see you.
Quite a lot going on in the world at the moment. I can't remember the last time we sat down and had a chat. Maybe it was in Zurich last year.
Yes.
Yeah. How's the gold thesis changing since we had a chat then, do you think? I mean, it seems a bit more bullish than ever.
I mean, my thesis didn't really change, prices change. So I think it's playing out pretty well as expected. But a bit more quickly than expected, to be honest. Yeah, I mean, gold is up 40% year to date. That was a massive move over the last couple of days. Perhaps a little bit too far, too quickly, I would say. But in general, I would say we're in a bull market. Yeah, I mean that's pretty obvious. We're like in this stealth phase of the bull market. We're seeing that every minor correction is being bought because there's just so much capital waiting on the sidelines. So many people, especially in the Western world, completely missed the gold party. So yeah, that makes me for the longer term pretty confident. Yeah.
I don't think the party's over yet, though, is it?
It's over?
No, it's not over yet.
We'll see. No, I don't think so. I mean, I showed a couple of charts at my keynote where we're showing that from a monetary point of view, gold isn't, I wouldn't say it's dirt cheap anymore, but it's not massively overvalued. Yeah? And usually every big trend, every big bull market ends in extremes, in valuation extremes and also sentiment extremes, positioning extremes. And we're not there yet. However, I think we're like definitely in the second part of this bull market. And, in this year's In Gold We Trust report, we said, okay, in every golden decade, and we crunched the numbers for the 70s and the 2000s, in the second half of the decade, this is where what we call performance gold comes into play. So silver, mining stocks, and commodities start outperforming gold. So I think that's basically the main message of this year's In Gold We Trust report. And this is what we're seeing, Peter. So silver, although the gold-silver ratio is still, 87, 88, silver is slowly starting to outperform. We're seeing that the silver stocks start to outperform silver. We're seeing that the gold stocks outperform gold. So this is really a shift that we're seeing in markets, and this is a signal that this is like a new stage of the bull market.
Would you mind, because I remember being at a presentation that you were giving back in Zurich, I think a couple of years ago, and you were talking about these different stages even back then. Would you mind just sort of explaining what these different stages are and what to expect when we hit them?
Yeah, so this is based on the Dow theory. When I was still in the bank, my boss said you have to do a CFA, and I said it's like lots of studying. And so I said I would like to do the CMT, which is the Chartered Market Technician. So that's like for technical analysis, that's kind of the equivalent to the CFA. And you learn lots of interesting stuff, but also lots of useless stuff. But it adds to your toolbox, I think, as an analyst and also as an asset allocator. And I think, the one basis premise or the foundation of technical analysis is by Charles Dow, who, he founded the Wall Street Journal and calculated the first index, obviously. And he said that every big bull market has 3 different stages. So there's the accumulation phase, the public participation phase, and then there's a distribution phase. Now the first phase, accumulation, is when only die-hard contrarians, against
the grain of
exactly, invest where the price is already they're falling, kind of stabilizing. So that was, I would say, like 2020 to 2023, 24. So this is the point in time when you go to a cocktail party and say, I'm buying gold. People say, what are you crazy, Peter? Are you out of your mind? It's like the worst investment. Then the second stage is the public participation, which is like the longest phase of the bull market. This is when prices start rising. You see that the media picks up. You see that analysts start raising their forecasts. New products are being launched. So this, when you go back to the cocktail party again and say, I'm buying gold, people say, yeah, I'm considering buying gold. Yeah, I've also bought some gold. Yeah, perhaps some large mining stocks. So this is like I think the current phase that we're in. And then the third stage is when those early investors start selling. This is the
'cause they've made
distribution
enough.
fees
Right.
phase, yeah. So where everybody gets crazy and analysts say, I don't know, JP Morgan saying gold going to 10,000, and you know everybody goes crazy. And you go to the cocktail party and say, I'm buying gold. But say, are you crazy, Peter? You have to buy silver junior stocks. Yeah, you take as much leverage as
Yeah.
possible. Yeah. So
Yeah.
so this is the crazy phase. I think we're not there yet, but I think from a cycle point of view, it's important to really understand the big picture where we are.
And you're saying that we're obviously in this middle phase at the moment, right? How you're saying this is the largest phase of the three? Are we near the beginning? Are we in the middle? Or how long do these phases last as well?
I would say somewhere in the middle.
Yeah.
So in baseball terms, perhaps sixth or seventh inning, something like that. Yeah. Like second half in football terms, so somewhere like that. And there are obviously signs like the last couple of days where kind of telling me, okay, well, the market has changed. There's, some crazy valuations out there already.
Yep.
We're seeing like all the financings being massively oversubscribed. So this is definitely a sign. But then I think outside of our industry, and the mining industry isn't very big anymore.
No.
We're seeing that nobody really cares. Most of the generalist investors say, well, we missed the train. All those mining stocks, they've already risen too far. Gold is basically, it already has made the major move. So we don't see that, there's like the really big money piling in. And for example, for the GDX, we're still seeing, so 2024, we saw outflows from the GDX. 2025, on a net basis, we're also seeing outflows, roughly, I think, 2 billion. And what caused an enormous amount of excitement in the industry and on Twitter and wherever was the inflows that we saw in August, record inflows into the GDX. It was like 500 million. I mean, that's pocket change.
Yeah.
So therefore, I would say still way to go, but I think, for me as an asset manager, but also, as somebody talking quite a lot about gold and thinking about quite a lot of gold, I think, nailing the top, that's going to be the real challenge. And of course, I won't be nailing the top, but I think at some point we'll have to consider, the exit strategy. We're not there yet, but I think that's going to be the big challenge ahead.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored, with nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton. The upside here is tremendous. But Borealis is just the beginning. Through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and $121 million NPV at $1,800 gold, we're building a hub and spoke model designed to deliver scale and efficiency. Our vision is bold: to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
How tough is it to almost, you have this sort of 3 stages, you have these theories, and you have all this history of what gold has done in the past, but I feel like we're in uncharted territory a little bit at the moment, where there's just a lack of confidence in bonds and government debt. You have geopolitical turmoil pretty much all over the world. We've got this sort of merging forces in a way where I don't think we've really been there. Maybe we were sort of there in the Cold War, maybe, but this feels a lot worse. Does the fact that we're in uncharted territory sort of throw off the? Is it quite hard to predict now for you to sort of see how long this could? Because for me, it feels like this could go on for a very long time. None of these problems that are driving gold, the weaponization of the dollar,
Yeah.
it doesn't feel like any of these things are going to be fixed anytime soon.
I think probably that the same would have been said like in the 70s. Yeah, we're like in uncharted territory. Yeah, gold rising from $30 to $850. Yeah?
Yeah.
I mean, who would, if you're saying in 1971, by 1980 gold will be at 850, people would have said impossible.
Yeah,
Impossible. That would have to go hand in hand with hyperinflation, civil war, whatever.
Mm.
So I think it's always kind of uncharted territory and new things, new threats, new problems. But yes, I mean, it's kind of a poly crisis that we're seeing. We're seeing it's, I think that differentiates us from any other asset managers, that we really try to understand our monetary system and the flaws of our monetary system and what it means for asset allocation. It seems that, Peter, topics like that were only discussed in the gold bug circles, like a revaluation of gold, or auditing Fort Knox. Yeah. This has become mainstream, and Scott Besson, for example, saying they used to call him a gold bug, and gold is his largest position. Then you've got Stephen Mirren writing about this Mar-a-Lago Accord, where I think gold plays a role. Then there was the Federal Reserve coming out with a paper analyzing historical gold revaluations. Is it a coincidence? Perhaps, yeah. So I think that there's, many things happening now that we kind of forecasted over the last couple of years. De-dollarization, this revaluation of gold, then very, very important, and I think heavily underreported from my point of view, the enormous demand and the growth in demand coming from emerging markets. I still think that this bull market is primarily, the foundation of this bull market is the demand coming from emerging markets, from China, from India, the Arabic world, from Turkey. Then we've got obviously, weakness of the US dollar, and I think this is just the beginning of a bear market in the US dollar. We've got the pressure on the Federal Reserve. We've got many geopolitical things popping up basically on a daily basis. And then given all those different drivers, I think the Western world is still massively underexposed to gold.
Yeah.
And that makes me pretty confident for the longer term.
But that's the opportunity, right? Because you have had this sort of consolidation of gold within central banks, especially from the East purchasing. But it's only now that the bond markets have really fallen out and there's less confidence in treasuries, it's now getting to a point, it's like, okay, well, where is this money going to go? Where people just, in terms of, like we were saying there, the geopolitics, but also then just the economic mess that the West is in. It feels like there's still a lot of capital to be reallocated into gold from the West now, and that's like you were saying, that is just starting. So,
yes, I mean, if you have a look at the yield curve, if you have a look at the long-term yields, for example, I think France for the very first time now has higher yields than Italy.
Higher than Greece now.
Greece as well.
Yeah.
Okay. So I think we had the euro crisis in the periphery, but now it's coming to the center.
Yeah.
And is it possible to bail out France? Yeah. Or is it too big to bail? Yeah. What about Germany?
Well, rumors that IMF need to bail out the UK at some point.
Yeah, I saw that. Yeah. So I mean, somebody wrote recently that the bond vigilantes love gold, and I think that's really because gold is always being kind of framed as the opposition to equities. But from my point of view, there's a in every portfolio should own equities, and of course we can discuss if it should be heavily overweight U.S. tech at these valuations, or perhaps more emerging markets, more value, whatever. But I think the real kind of opponent is fixed income, especially with probably the next stage or the next wave of inflation being around the corner. So therefore, if we say, from this huge cake, in the bond market, if just a tiny piece is going on a constant basis to the gold market, that's serious money. And I can tell you that if you talk about, with let's say institutional players, mainstream investors. If you talk about inflation cycles, if you talk about the Austrian School of Economics, if you ask the question, what is money?
Yeah.
You're still being kind of not taken serious, being ridiculed. And I think we're really now in this kind of a stage of the crisis where there's actually our monetary system is being questioned. And that's not Ronnie Stöferle saying that. There's like Ray Dalio, Stan Druckenmiller, gentlemen with a fantastic track record. Jeff Gundlach, the new king of bonds. Yeah, I mean he's talking about gold. Yeah, that's quite telling. So, and those guys know long-term cycles. Yeah, so that makes me pretty relaxed about our views, our calls. Yeah.
Yeah, I just wonder as well. Is it? And I've mentioned this already at the show, but it just seems like silver, although it obviously is above $40 now, and it's looking like it's performing quite well. It just seems, relative to gold, it still feels like there's a lot of catching up to do. How are you looking at the silver market moving forward? Because we've had this structural deficit in supply for a while, but there's always been a lot of influence with traders over the silver market. Do you feel like that's sort of starting to dissipate a bit now, and that we could be sort of moving a bit higher on silver?
The thing is, gold-silver ratio at 70, 87, 88, I think, silver is still, relative to gold, it's massively undervalued. So the long-term median, I think since 1970 is like around 60. And usually big trends don't add like at long-term mean values or median values, so they end at extremes. So why not the gold-silver ratio of 10 or 15? So I think silver is relative to gold is massively undervalued, but also on an absolute basis. And we know that we've seen this very steady growth in demand from the solar industry.
Yep.
We've seen now this is going to be the 5th year with a supply deficit. So there's a very solid supply-demand case, but what's really missing for the perfect storm is investment demand. And we haven't really seen it. We saw that silver is now a critical mineral. We saw that I think Saudi Arabia was buying some silver. So if that's going to start, if people realize that, well, actually silver is, the little brother is massively undervalued compared to gold, then I think if there's serious money coming in, then we can quickly take out the all-time highs at 50 and think over the cycle go to triple digits. Yeah. I mean, I showed like yesterday, I showed a matrix with various gold price targets and then gold-silver ratios. And I said, in our extreme scenario, the price of gold would go to $8,900 by the end of this decade. Yeah. It sounds like crazy, but that's a 19% CAGR. And gold made like 40% year to date this year. Wow, so 19% CAGR until 2030. Is it optimistic? Yes. Is it unrealistic? Well, so if the gold-silver ratio, in that scenario goes to 10, we'll end up with silver at 890. I mean, that's not my official forecast. And I, at my presentation, said, don't go out telling everybody Stöferle is saying silver goes to 890. Yeah. But I think it's, we've seen those massive moves in silver, and we know that once it really picks up momentum, it can go pretty quickly. So I think that from a risk-reward perspective, silver is a great choice at the moment.
But when you've looked at previous bull cycles in precious metals, obviously you're talking about these different phases. We're potentially in the middle of the middle phase where you start seeing participation. Obviously, silver is known as the poor man's gold. It's more attractive to a retail audience. If we are now starting to see this mainstreaming of precious metals, is that something that you can see really driving? Is actually the everyday person now really starting to pile into silver? Or are you thinking more, because obviously the central banks which have been behind gold aren't going to start buying silver. It's just too expensive to hold, right? Yeah. But so I guess the real demand would have to come from either institutions or retail, wouldn't it?
Yes, I think so. And I had, Peter, for example, I had a couple of conversations with institutional players, and they hold like 1% to 2% gold. And they all said, we're considering selling gold now. So they want to take profits. Yeah. Right. And I was trying to make the case that gold is still, attractively valued. Yeah. But I said, no, it's already gone too far, which is also a sign. Yeah. Because normally at the end of the bull market, everybody's going crazy. So I was making the case, okay, if you don't like gold at these prices, have a look at silver. I mean, this is underperformed over the last couple of years. Yeah, there's the structural demand, yeah, kind of the green demand. Then there's also the investment demand that will kick in at some point. I said, oh, okay, that's interesting. So, I mean, the silver market is like 10% of the gold market, more or less. So you don't need like huge amounts of capital to really, kickstart a big move in silver.
Interesting. Okay. What are you thinking at the moment? Obviously, like you were saying, a lot of these junior companies are now, when they are sort of doing financing, they're overbought, and there seems to be a lot of cash sloshing around. How are you looking at allocating your capital into the mining sector in general?
Well, we've got a slightly different approach from my point of view. First of all, mining investments probably it's one of the most complex asset classes because it's very much top down.
Yep.
You have to understand the big picture, but it's also extremely, bottom up, yeah. And you have to understand, what can go wrong in a mining project.
And there's a lot of things that can
Many
go wrong.
things, yeah. So it's a very, very complex, a very demanding asset class. And my one of my major assumptions and findings after so many years in this industry was it's actually not, a buy and hold asset class. Yeah, it's not something where André Costolani said you're buying equities, yeah, and then you take sleeping pills, and 10 years after you wake up and you will be rich. I think it doesn't really work with mining stocks. Yeah, we'll end up 10 years later and see, okay.
Well, because it's so cyclical, it just can't. Right?
Exactly.
Yeah.
So our approach is a very active approach based on our Incrementum Active Aurum signal, which is basically telling us when to play defense, when to be more neutral, and when to play offense. And since December 2023, we're playing offense.
Nice.
And so far we did pretty well on that, yeah. But there will also be a time to become a little bit more cautious again, and that's our approach, because we probably won't be outperforming on the upside, yeah. But we really try to outperform, in those major drawdowns that we see in this industry, like 2008, 2009, 80% drawdown. Yeah, this is something that we really want to avoid with this concept, which is different to most other investment funds, but we feel comfortable and our clients feel comfortable with that approach.
And what's the difference between an offensive approach and a defensive approach? How would that work?
Good question. So with an offensive approach, we're we only hold very, very little cash in the fund. Yeah, we can be massively overweight in the silver space, small caps in the silver space. While when it's neutral, it's obviously something in between. And when it's when we've got a defensive signal, we've got a higher cash allocation.
Yep.
We've got a much bigger allocation in the royalty and streaming space. We can buy corporate bonds there's a really good value on some corporate bonds from the mining space.
Yeah.
Large cap producers, but no silver juniors. We don't do any private placements and so on. Yeah.
Oh,
so
wow.
it's really, there's so much different, so many different levels of risk that you can have in this industry. It's fascinating. So we're really actively managing that risk.
Interesting. Okay, Ronnie, thank you for your time.
Thank you, Peter. It was a pleasure. Thanks.
Thank you.